Okay, let's move on, right? So yeah, it's gonna be market structure, advanced market structure. I'll just say algo market structure, algo market structure, part two, right? So if you missed the first part, you can always go back to watch the first part, right? Let's move on to part two, right? So this is it. Now I explained the ABC, right? Which is this, right? So this low here is your A, this is your B, and this I is your C, correct? Which a lot of you actually already know how to, some of you already understand it, right? B and then this is your C. So we have this break, we have this break. So what are you looking at for price to do based on the basic market structure, substructure retracement to take out the B, right? To take out the B, then minor structure, right? Now in this case again, this becomes what? The A. So then price reverses again, does the stuff, breaks again. So now, while the basic market structure will tell you to actually buy from here, that this is your swing structure now, to tell you to buy from here, you know, when price comes back here for you to tell you to buy from here, the algo structure will tell you that no, that this is the B, right? So you shouldn't buy from that is a trap. So what are you looking at for price to do? So now you understand that this A here to this your C to this currency is what your new swing, right? So now what do you anticipate price to take out the B? Then you have a continuation like that. So now you can see this basic stuff here. And let me give you another scenario. Now this is one scenario, right? I have two scenarios where something like we're going to see something like that, right? Just this. You can just say type A. You can just say this is type A. All right, so we have a break of this I. We have a break of this I as well. We have this low A, B, and C. So this is type what? Type 1. Type 1. Please pay close attention. So what do you expect price to do in this case? Substructure, take out a B, then buy off. Now in the type 2, for type 2, price will do something like this. Please take note. Before price breaks this structure here, price will create a low, then now break the high. Please take note of this. Now before price breaks this main structure here, price creates this low, then eventually breaks the structure. So in this scenario, right, this right here is our A, this is our B, and this I is our C. So now what are you expecting price to do? Remember we are bullish, right? Substructure, take out the B, then minor structure. Then this is our type 2. Type 2. Type 2, then that is type 2. Right. Please pay close attention to this. Type 1 and type 2. Type 1, type 2. The type 1, we have two breaks. Price takes out the low, the closest low. Then we have price take out the high. The type 2, we have these. We have this low here before price takes out the higher high, right? Before price takes out the higher high, we have this low, right? So that makes this guy the B instead. So that means in this case now, this is the A, we have the A, the B, the B, and the C. Now for type theory, we have price do something like this. We have price give us a break, right? Remember, according to the basic market structure, this is a swing structure, right? This low to this high is a swing structure. So now that means that now we don't know yet if this low will hold, right? Now we don't know if this low is going to hold, right? So we now have to play patience to see what price is going to do, right? So immediately we price to something like so now we are actually focusing on this swing now to buy from, right? That's based on the normal market structure. But now the hybrid structure is telling us that this low will be taken out, right? Because there is no B here. Whenever there is no B, what do you expect to happen? Please put this at the back of your mind every time. Whenever there is no B, just expect price to do something like this. It happens all the time. Take out the A, then this will happen. Please take note of this. Whenever there is no B in the market, where you have only A to C, whenever you have only A to C, always expect price to just take out this A all the time. You don't want to be caught trying to buy from here. You don't want to be caught, you don't want to be the trap. The basic market structure will tell us to buy from here, but the algo will tell us that this is going to be a trap because there is no B like this or like this here. We had type 1 and type 2, but in this scenario, there is no B here. So that means that automatically means that this low will be taken out. That gives you a meaning that okay, you anticipate you expect this low to be taken out automatically. Now, in another scenario, right, to just make this one make sense, where we have the same thing again, right? We have this will happen, right? So that means this break. So that means that this low from this low to this high is what is our swing structure. So that means you're looking to buy from here. But because you're looking at this now, there is no B here. However, price can do something like this after. Come very close, tap into this, right? So that means before first thing is we have our A, this A to C, right? Our A to C, there is no B yet. There is no B. There is no B. But then maybe we have something like this now. Now in this scenario now, we now have A to C. But price now printed a B after the C. Price created a B after the C. Please take note. Price created a B after the C. Then you can now consider this zone valid to buy from. So what will now eventually happen? Price to just do something like this. Take the B out, then boom. It happens all the time. It happens all the time. It happens all the time in the market, right? So you don't get confused and believe that prices are already bearish. In scenarios like this, mostly prices are still bullish. And so most people actually get confused and they start selling. They believe that okay, price is already bearish or something. Our price just takes out the B. Now take note. In this case here, focus on this case. In this scenario here, there is no B, right? There is no actual B. What did price do? Price came down, created substructure, right? Came down, then took out this A, right? And took out this A. But in this case, you can see how price created a low, an obvious low that took out highs, right? This low took out highs, right? You can see how price created this obvious low. For me, but let me just give you this arc. What's qualified as a low or high for me? It must be in a V shape, right? It must have this very obvious V shape, right? If the V is not obvious, it's not a low or high for me, right? So now you can see this. Price created a B after the C, which validates this zone now to look for buys from. I hope you are clear. Now let's go to the chart example. To look for, first one to look for is scenario. Is this type 1? So this is type 3. This is supposed to be type 3. Supposed to be type 3. Type 3 and type 4. Type 4. Please, are we following? Are we following? This is what I'll be explaining to you guys today. Type 1, 2, 3, and 4. Are we following, please? All right, perfect. So let's go to Euro USD. Right, so let's use a 1 hour time frame. Now, if you guys remember, during the last, I think it was just last week or so, when we had a call, when I said, I think price was still here, or still here then, when price, gave us this structure, right? I think I was explaining the basic market structure, correct? The basic market, and I said what to expect. Now, what do we supposed to do? Create a substructure and do what? Sell off, correct? Now you can see it. Now you can see it. The same thing that's happening here. So back to what I was talking about. Now the type. Let's go back to type. The type 1, right? Where we have these. Let's see if we have it here. Right. So we have it here. This is type 1. Let's go to 15-minute time frame. On the 15-minute time frame, it's very obvious. This is the type 1 here. Let's take this back. This is 30 minutes. Now we can see price is bearish, right? Price is bearish. So that means you want to look out for sales, only sales, right? Only sales. So now you're looking at this high. You can see this is an obvious high, correct? This is your A. But first thing you want to focus on is the first high first, right? But this looking at this after this break of structure here. Okay, we don't have a clean break here, so let me use another example. I need a very neat example. Very clean example. I mean, if you look closely, we can see the type, this type B here, the type 2 here, this type 2. Look at it here. Can you see it? See this, the USCHF. We can see it here. However, anyway, let me just show you guys. This is, let me cut price back here. Right, so if you look closely, right, you can see we have this sweep. Then we have the main break here, right? We have the main break. So where is the low? You can see this one, this low here, the very obvious low. You can see this low here. This is your A. This is the A. This is the B. And this is the C. So what are you expecting price to do in this case? You expect price to sell. Take out the B. Then we have this, correct? And that's exactly what happened. Right, so this is a type 2. When we get to liquidity, right, I will explain why you're not looking at these lows, looking at this particular lows here, and why you're focusing on this particular one and not all of these lows, right? Because I know you guys already have questions in your mind. Why did I choose this one or whatever? Why is it this one? When we get to liquidity, I would explain why this one is a valid one to actually use, right? So this is our chart example for type 2. Type 2, right? Now let's look out for type 1. We're still looking out for type 1 example. Now we have a perfect example for type 1. It's not really perfect because this is another example for type 2. If you look closely, right? It's another example for type 2, only that I didn't take out a major low, except for this low here. But this is another example for type 2. You can see this low wasn't taken out. This particular low here, you can see what happened here. It didn't take out this low here. So let's say we have this high been taken out. We had a little break here. We had a first break, right? But then there was no second break. Surprise, this high here becomes the B. Still the same type 2 actually. Don't confuse yourself. Don't worry, you will get it. You will get it. Don't worry. For sells, you can see price is obviously bearish here. You're looking out to actually sell to continue with the sell. This is a A. Please just relax. If you're not getting it yet, you will get it, right? Calm down. This is your A. I should have done this way before starting the call, but all the same. But this is your A, this is your B, and this low here is a C, right? This low here is a C. This lower low is a C. So that means that you can see price fails to take out this low, automatically makes this guy inefficient to actually, invalid to actually sell off from. So that means you're expecting price to take out the B, right? Then we have the sell. However, let's look for a perfect example for part for type 1. I'm looking for a perfect example for type 1. Should I use GBP USD? Now, if you remember what type 1 is again, just this, right? So first take out the B, then this. This is type 2. You have the buy scenario, right? So price takes out this one. Now, so that we've seen multiple examples of the type 2 for type 1. Now let's look for type 1. Type 1, type 1, type 1, type 1. Let's go to the 4-hour time frame. 4-hour time frame. Now you can see, okay, look at this. Look at what we have here. This is a typical example of type 3. You can see this type 3 here. This is a typical example of type 3 here. Now, what do we have here? We have this break, right? We have this break. Then we can consider this I, our C, right? So that means this is our A, and this is our C. So what are we expecting? Well, you can see how you can see there is no B here. There is no B from here to here. There is no B, right? However, price created, but based on what I explained here again, I said I would like to see my B to be very, very visible. Something, a very, very visible B like this, right? So consider it a low. Now you can see what price did here, right? We had this swing structure. We had this swing structure, but there is no B here. Matter of fact, we can consider this a B as well, right? Even though we had little reactions. But then it's because from this swing structure now there is no B. What are we anticipating price to do? Expect price to take out this A, then now move in our direction, right? This is the basic thing what we expect price to do, right? Looking at what we have here, price to take out this one, then now move in our direction. And it's exactly what we have here, right? The type 3. Type 3, please take notes of all these things. This is exactly a typical example of the type 3. Yeah, a typical example of type 3, right? You can see how price took out the low, then now, moved in our direction. Then now moved in the direction. So I'm looking for a typical example for type 1. I'm still looking for type 1. Um, Type 1 has it's actually high probability. High probability. Once you support type 1, just don't hesitate. Take a trade that way. Just take the trade. Now, this is a perfect example for type 1. I don't need to even cut price. Now, what do we have here? You can see this low. We have our A. We have this break. Oh, we have this break. If you look closely, let me just go to the 1-hour time frame. Let me cut price back to the zone. Right. So let me go to the 1-hour time frame. Now, if you look closely, right, we have this first break. Then we have this second break here. Right. So this is our A. Where is our B? This is our B, correct? And this I here is our C. Or we could just say this is our C here. However, we had this reversal here, so we could just assume this right here is our swing structure. Right, so this A to this C is our swing structure. So now where is the B? This low here is the B. Now you can see what price did. The type A that I was explaining. We have this, and this. A, B, C. So price takes out the B, comes into the A and moving, continue the direction, right? And you can see it right here. A, B, C. The price takes out the B. Now remember the basic market structure will tell us to buy from here, correct? But the advanced market structure will tell us that this is a trap. So we should avoid it. This is a B, should be taken out. Right, and you can see what happened. Then price continued like that. There's a perfect example for the type 1. And the last type which I'll be explaining is the type 4. Now this type where we have the B after the C, right? When we have the B after the C, please take note, the A to C happened. Remember I showed you guys a scenario where this one happened on GBP USD, right? When you see a smooth move like this, right, and you can't see any B, right? That means you automatically your mind is telling you, even here as well, automatically your mind is telling you that what this A will be taken out. But whenever you see a B very close to this A that comes down, price goes up, just you can now mark out this low here as a B. Let me give you guys an example for that. Example of that now. Go to the 1 hour time frame. All right, so this is a perfect example as well. Let's say for on the 4 hour time frame. Now what do we have here? Price is bullish, right? Price is bullish. We have this break. That means this is our A. So we only have A to C in this scenario now. Okay, I think we have B here. We have B. The price took out the B. You can see this. Price took out the B, then bought off. However, we can say let's on the daily time frame. Daily time frame, we can say what? Look at what we have here. We can now say that the daily time frame is not really clear. It's not really clear, but I'm looking for a perfect example for type 4, the last type. Where are you? Where are you, brother? Where are you? I think I found here. All right, so I found it. Let me just call price to this zone here and go to the 4 hour time frame. So now you're looking at this now. So you say this is our the obvious A. Please, it must really, really obvious, right? This I to this low. Now this zone is very, very obvious now. That means we have A to C as our swing structure. A to C as our swing structure. But now within this zone, now from this A to this B now, from this A to this C, there is no B, right? There is no B. So what now validates this zone now? Why shouldn't this I be taken out? Why shouldn't this B be taken out? It's just very simple. We can see that price created a B after, right? And this B is very close to this A, right? So that gives us this type 3, which is type 4 rather, which is the A, C, and the B, right? Which is what makes this guy now which is what now validates this zone. If there is no B, this obvious B being very close to this A now, we can now anticipate price taking out the A, then dropping, right? But in this case now, price created a B, a very obvious high here, right? Which is what validated this A now. So we can now say, okay, we expect price to take out the B, then sell off, right? And let's look at what happened. But this is a very, very valid one, right? And you can see that. just like that, right? Now you can see that. You can see what happened. I hope you are really getting it. Don't worry if you're not getting it now. You can always come back to the recorded video, and it's almost 10 p.m. already. I don't want to, like I said, I don't want to waste our time. I really don't want to. I want us to really, really get what we are doing here. You know, I want us to really get it. So now that I've been able to explain the type 1, type 2, type 3, and type 4, right? And I've shown us chat examples as well. Chat examples. I've shown us chat examples. Now, next call is going to be the final call on our go market structure. I'll be explaining the deep part, how you can really, really understand the swing structure. I'll be focusing more on the swing structure, right? I can identify each swing structures, right? Each swing structures, right? So that will be all for now. Let me stop recording.